What is good, guys? It's Ray J back with another video. And in this one, I want to break down what's going on with the overall market and talk about why I still believe it's very likely the market is going to get a November squeeze. Now, it may sound like crazy to a lot of people. It may make no sense whatsoever. But once you watch this video, I'm going to review why on earth I think it's very likely and how this could affect Tesla moving forward, and why I still believe there's going to likely be a November squeeze even after what we saw on Friday. But before I break anything down about why on earth this is, before I talk about how this could affect Tesla, let me just mention a couple of things. I am personally not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. This offer ends in just 4 days from now, so check it out before they run out. Anyways, let's break down what's going on with the market. So when it comes to the market, I'm sure you guys heard that the stock market crash is coming. Everyone is saying there's going to be a massive, massive crash. It's going to be the end of the world and this and that. In my opinion, I disagree with that notion. I actually have a different view for 2024. I'm going to talk about that a little bit later on. But for now, I want to break down what I think is going to happen for the remainder of the year, at least for the stock market. Right now, the market's looking bearish, so I could see some more downside going into next week. I believe we could see SPY reach 404 to 400. It's a real possibility. We have an unfilled gap very close to that 405 area too. And for Tesla, we could see it retest 202.5 to 200. However, we have something big coming out for the upcoming trading week. As a reminder, like I talked about yesterday, for Wednesday, we have the FOMC meeting this Wednesday, November 1st. And that is going to be very important. Whatever Jerome Powell says could flip the market direction, especially if the Fed ends up pausing as we're expecting. So if the Fed pauses / skips during this rate hike, this is going to likely cause a big rally. So if that ends up happening, that could be one big catalyst. We also have Apple's earnings for Thursday. It's going to be very telling as well. But even if we just disregard this information and we just look at the technicals, we're getting lots of signals, tons of them, suggesting that the market's about to bottom and we're going to get some very big bounce. So the first one to talk about would be the fear and greed index. This is on extreme fear. Everyone is so fearful. Everyone is expecting some kind of crash. And because everyone's expecting a crash, compared to the last few weeks, we're seeing even more puts being bought. The puts to call option index right now is still favoring fear. People are continuing to hedge, believing that there's going to be some massive, massive crash. And we have millions and millions of puts being open for November, December, January, and February. And let me show you what exactly I'm talking about. So if you look at November 3rd, we have over or very close to 700,000 puts expiring. This is going to be for the FOMC week, betting that there's going to be some kind of downside thanks to FOMC. And on top of this, we have a 2.4 puts to call ratio. This is very important. All right. And then on top of that, we have for November 10th, hundreds of thousands of puts. We have over 2.3 million puts expiring on November 17th, a 2.07 put to call ratio, 2.1 put to call ratio, 1.68 put to call ratio for December. On one of those days in December, we have over 2.4 million puts expiring. So everyone's betting the crash is coming. There's going to be a big crash. And the majority of positions that were opened over the last few months have been for puts for November, December, January, and February. We're continuing to see puts being bought. People are betting there's going to be a big crash. My question is, if the crowd is saying there's going to be a crash, will there truly be a crash? And my answer is most likely there's not going to be a big crash like a lot of people are thinking. My view of the market is we're going to enter the pump and dump market, kind of like a kangaroo market. I think it's already starting, and I'm going to break down a little bit more about that later on into the video. But please remember, everyone is betting there's going to be a crash. A huge crash is coming. We're expecting it, right? People are getting ready for it. They're expecting the recession to crash the market to new lows. That makes me suspicious and a little skeptical because remember what the market makers did. Earlier during the year, the market continued to squeeze because one of the main reasons was because of these insane amount of options. Seasonality suggested the market was supposed to tank, so it ended up happening. But this was all planned before. We have to remember that seasonality is still playing out very nicely, and seasonality suggests that the market is in a bottoming process, and that's going to likely play out. So with that being said, I'm going to talk about the other indicators again in just a few minutes. Let's actually look at seasonality. So looking at seasonality, this has brought up some very, very nice looking historical trends that tend to perpetuate and continue, in very, very interesting cycles. And these cycles are, very important for dictating how the market's moving. So looking at the market, this midterm election year seasonality pattern has perpetuated during other election years, which have very, very different effects on the markets. Now, this is important because this chart is very relevant for today and other election years, not just midterm elections. All right, let's review this real quick before I break down something else that's important. Remember, guys, for August, this is saying that the market would top around this July period. This is when the seasonality started. August is when we get the correction. And then as we approach September, we pump and then we correct for September. That's what happened in real life. Just like this, we kind of like push up approaching August, correct a little bit, then we pump approaching September, then we correct even more. The red line is the one that's looking very, very very prevalent. It has a very strong correlation so far. Then look at this pump that happens for the first few weeks of October. Is that what happened? Well, October came, the market pumped, and then the market dumped, and the market made a new low, right? Just like how we made a new low right here in the red line. What's going to happen next is going into November, the market is supposed to get some kind of rally, cool off a little bit, and then just continue to just uptrend as time goes on for December and just continue to push and push in respect of very strong uptrend. It's not about whether or not we're up or down. It's about what's the trend going to look like. The trend is going to be to the upside starting in November. And I believe we're going to get a very big bounce very soon. So that's what seasonality suggests. The market bottoms near the end of October. And if you look at, if you look at the charts, we're near the end of October, the market is bottoming, and we're going to likely try to bounce. And then on top of that, when you look at the daily on SPY, we have a bullish divergence developing on the daily chart, suggesting that a bounce is coming soon. On the 4-hour time frame, the same thing is developing. We have a double bullish divergence developing right here. You guys can see it right here. We have a double bullish divergence, which is becoming more powerful. And the more that this divergence stretches, the stronger the bounce is going to be. So technicals are suggesting a bounce is coming soon. We could drop a little bit lower first. 404 to 400 could come before we bounce. But later on, the bounce is likely going to be on the table. And then on top of all of this, if you're still not convinced, okay, if you're still not convinced that, all these people are shorting and seasonality and all these other factors are playing big roles in why I say this, another thing that's very important is going to be the Fed, and then also these other technical indicators. So when the fear and greed index is at extreme fear, we tend to see the market bottom. Historically, that's what tends to happen, and we're going to be expecting a bounce soon. On top of this, look at another very important indicator, our McClellan Volume Summation Index. So basically, when we go back, okay, let's go back on the chart. I'm going to use the weekly on SPY just to show you what this is telling us. If we go all the way back to 2022, starting from October right here, what did this basically tell us? The McClellan Volume Summation Index told us that back in October, we were at these extreme fear levels in 2022, and it was telling us that this was a bottoming process, and then this started to rebound as the market was in a bottom. So when it hit extreme fear, this is when the market was ready to bounce, and that's what happened, okay? And then look at what happened again in the March period. March 2023, we hit this extreme fear level, and this was telling us the market was going to bottom. This was saying the market was in a bottoming process. We're at these extremely fear levels. Expect a bounce in March of 2023. What happened in March of 2023? The market continued to sink. We came down very hard, and we came into this bottoming process. We didn't actually break this low, but we came very close to doing so. But this called the bottom in March before the market started to rally. Right? We got this crazy rally from March going all the way until August. And seasonality, it didn't really fully support this, but it started to support it a little bit later when other things changed, such as the options chain and etc. But seasonality is now a lot more prevalent, at least from like July and beyond. And now on top of this, notice the market was correcting for 3 months, just like what seasonality is telling us. We're in a bottoming process for October. And then as the market is correcting, what's happening? What's happening is SPY is hitting 409. We're at this new low right here. we're approaching extreme fear and another signal that suggests that we're in a bottoming process. This is what this chart is suggesting. When we hit these lows, these extreme values, that's when the bottom is coming. It didn't call the bottom in September. It wasn't saying it for September. It was saying this bottom is likely coming for October, and that is likely going to be the case, right? So this is basically suggesting the same thing. The put and call option ratios continuing to go up, uptrending like crazy. This tends to happen when the market is very fearful and it's hitting these extreme levels. At least it came very close to doing so. And you could see in October, this was actually very close, actually a little bit lower than where we currently are. So it doesn't have to be perfect. Market volatility is extremely fearful, and the market is continuing, to sell off a little bit. But I believe these technicals are becoming stronger. Now we have something else that's going on. Let me show you something else. We have another divergence developing. If we look at the VIX, check out the VIX, guys. On the daily chart, I think the daily is right. Yeah, it's correct. So the VIX is forming a divergence with the S&P 500 or a SPY. It's the same thing, whichever one you want to use. Basically, notice how these things are supposed to be inversely correlated, right? When the VIX goes up, the market's supposed to come down. The market made this low here. It pumped a little bit, then it made a lower low. The VIX pumped, came down. Instead of making a higher high, the VIX made a lower high. So there's a divergence forming. The VIX is making a lower high, the market's making a lower low. That tells us when this happens historically, this tends to mark bottoms in the stock market, right? I could give you more examples of that happening. So that's telling us that the market is in a bottoming process. That's what that technical indicator is suggesting. I think this happened in March. March could be another example if I could find it. If not March, I know this happened later on and during another period. But right here, guys, check this out. Back in March, the VIX peaked on March 13th. That was right, where is this? Right here, when the VIX was, wait, hold on. Wait, I think I went a little bit, I didn't go further back enough. It's actually right here. Trying to find March right here. Sorry about that, guys. March is right here. So on the 13th, that's when we saw the VIX peak. That was the same day that the market basically peaked. And then we started to see the market uptrend from there, and the VIX continued to just slowly downtrend. So it didn't really do the same thing there, but the VIX formed a topping candle. But there was another example I saw. I think it was October of last year. I think that's the better example. So right here, I think October is the epitome of this. October 2022 is perfect to show you what I'm about to talk about. So if you go back to 2022, so right here on the chart, basically, the VIX peaked in September, and then the VIX made a lower high right here in October 2022. And instead, what did the stock market do? The market made this low right here in September, and it made a lower low in October. The market makes a lower low, VIX makes a lower high. That tends to mark the bottom for the S&P 500 and the top for the VIX. So the same thing is happening now. The VIX made a lower high, the market made a lower low. Same thing as October 2022 is happening when the market bottomed. So these technical indicators are telling us we're in a bottoming process. There's likely going to be a bounce. So technicals support a bounce for November. Okay, seasonality supports a bounce for November. The options chains suggest that market makers may try to bounce the markets for November. And then, going forward, we also have bullish divergences. The volume summation index is telling us there's going to be a bounce likely coming soon, especially for November. Everything is pointing in that direction from what I'm seeing, guys. It's very interesting. And like I said in my previous videos, Tesla is a little weak. We're going to see Tesla sink towards 200 to 202.5 possibly. It could drop a little bit more, and we're going to be watching if 200 holds. If it holds 200, the bottom could be in for Tesla, and Tesla could bounce for November. If we lose 200, we could see 190 on Tesla, very close to that like gap fill around 193. But even if Tesla drops a bit more, I'm still anticipating that as we approach the Cybertruck event, just like SPY, we're going to be anticipating some upside. I think Tesla could bounce with SPY as well for November. So can Tesla squeeze for November? Yes, but before it happens, we're going to likely see some more downside. We could see Tesla revisit 200, maybe some lower levels first. But sometime in November, I am anticipating that if the market truly bounces, which I think it will, Tesla is going to follow the trend. We're going to see Tesla try to fill this gap all the way back up towards 240, hopefully before the year ends. for the year. So the Cybertruck event could help it. The deliveries for early 2024 could help it. So I think that by January, if not by December, we're going to likely see this gap get filled. I think Tesla's going to bounce very nicely. Tesla could drop a little bit more first, but there's going to likely be a bounce, and that's what I'm still seeing on the charts. I think that so many indicators suggest a bounce is coming, so I'm still leaning in that direction. But before the bounce comes, we could see a bit more downside. We could see SPY hit 404 to 400. We could see Tesla hit 202.5 to 200, maybe even some lower levels, and a bounce should be coming later. And then for the crash, guys, the last thing I'm going to say is I don't expect there to be one massive crash. I think we've entered the pump and dump market where the market's going to rally for a few months. Then it's going to tank for a few months and rally for a few months, then tank for a few months. We've been doing that back and forth for the last 6 months for a very, very long time. And I think the market's going to continue to maintain these levels because they're not going to let the market just crash and crash and crash forever for like 6 straight months because everyone's going to short and the shorts are just going to make millions and billions of dollars. They're not going to let that happen. The market makers are going to continue to play with retail. They're going to continue to manipulate the stocks, and we're going to see pumps, many months of pumping, many months of dumping, and back and forth and back and forth. For now, we're about to enter a multi-month pump for the markets for November and December. Could go into early 2024. Then we're going to see another correction. The market's going to tank again after that, and we're just going to continue to go back and forth and back and forth. So we're not going to worry too much about 2024 now, though. Let's just focus on for what's going to happen now. There's going to be more downside for the short term, but then for the medium term, I'm anticipating another bounce based off all these different indicators, based off what's very probable from the Fed, based off what happens based off seasonality and so many different factors. All right, so I hope this video was helpful, guys. I still hold the same view. I'm very consistent. The only thing that has changed is my view of how low the market could go. The market may go lower than what I was initially expecting, but it's okay because I still believe that we're in this bottoming process and things are going to change. All right, that's it for today. Thank you all so much for listening. Have a great day. Market to the moon alongside Tesla because the long term is still very bright. And peace out.